Right, so here's how me personally understand the candles. Honestly, this video will be confusing if you haven't watched the video of candlestick patterns, and also if you don't know, basically if you don't know candlestick patterns. So right here we see a bunch of candles, but they're specific candles, not like these, these. So what we want to look at, if you're looking for reversals, we look at the wicks. If you're looking for breakouts, you look at the bodies. So where do you expect the market to reverse? Not like here, the market reversed here, so you can see it has a long wick right here at the downside. So that means the market moved from here up, came all the way down, but then the bears pushed it way before the candlestick would even close. That means they pushed it so fast, then it went right back up, and look at how small the body was. So that's a hammer right there. So yeah, this is a sign of reversal. So the market went all the way up. Same thing happened over here. We can see we had a long wick, then the market went up. So same here as well, we had a long wick, market went down. So then you got the same thing here as well, but instead we got a breakout. So the beauty about trading is that not every single thing is guaranteed. It just increases your win rate. So strategies increase your win rate. They don't give you a guaranteed win, they just increase your win rate. So let's say, for example, you are a trader that watched a video about wicks and all of that, then you happen to find this wick over here this week, and you're like, wow, that means the market is gonna reverse. So you enter right here, set your take profit above, stop loss below the wick. Boom, that's a profit right there. You'd win. So this method has worked for lots of people, but it doesn't work all the time. It works most of the times, but not all of the times. So now this strategy needs to be combined with 3 or 2 stuff, and that's key levels. So how do we trade this? Let me go to random markets. So if you look at, let me find the market. All right, yeah. So if you look at this trade, yeah, this market, this is Euro USD. We go to a 1 hour time frame. Hold on. Let's try to predict it here. Let me just erase it. All right, so we go to a 1 hour time frame. Let me find the place. All right, so yeah. So we can see we have a key level right here, right? Something like this. So you have to combine the wicks. Don't just rely on the wick alone. You're supposed to have confirmations. So confirmations are a set of rules you must follow before taking a trade. So here we can see an ascending channel. We can see that the market every single time it reaches this level, it always reverses. Yeah, so now our first confirmation should be that the market must be at this level, at the support level. That's the first confirmation. The second confirmation is we want a rejection. And remember what I said, wicks, if you're looking for rejections or reversals, you look at the wicks. So if you go to 1 hour time frame, what do we have here? Number one, the market is at our key level. That's the first confirmation you need. The market is at our key level. Number 2, we have a hammer right there. That's a good rejection. That's a rejection. So here you can see we had a doji, the market reversed, went all the way up. Same here as well, we had an inverted hammer, the market reversed, went down. So yeah, it left a wick behind, so that means we should look for buys. That's a good confirmation right there. Then you look for buys to that level, set your stop loss below the wick. You go to a lower time frame and you see how that trade looks like. So you can see this is a very nice trade. That's a very nice trade. So you can also rely on evening stars. So yeah, my trading rule is this. Number 1, the market must be at a key level. Number 2, I want a rejection or a breakout, then confirmation, and I can take the trade. So rejection is also part of the confirmation. So let's go to Euro USD. Oh, that was Euro GBY. Alright, so if you look at this trade right here, this one that I've done earlier. Actually, yeah, there's this trade I predicted here just today. So right here we can see that we have a key level right here. The market keeps respecting this level here, it just keeps ascending all the way. So you go to a 1 minute time frame. You first waited for the market to reach down here, and after it reached down here, we compared the behavior the market had previously with the current behavior. So if you look at these previous candlesticks, these previous swings, you can see that the market would give us a doji, then it shoots up, or it would give us like a long wick below, then shoots up. Doji shoots up. These are evening star, by the way. Anyway, so as I was just saying, you can see we have an inverted hammer, doji right there, doji, then bearish engulfing, went all the way down. So that's exactly what the market did here again. So yeah, this is not trading with psychology, because you're comparing the previous price actions with the current one. So if you look right here, you see we got an inverted hammer and also got a doji. That's jackpot right there. That's a sign that you must buy already. So you make your entry right there. That's a confirmation, by the way. So the first confirmation right here was that the market is on a key level. The second confirmation was these. So yeah, then you make a buy entry, set your stop loss below the wick, then boom, it is take profit. When you set your take profit, you must set your take profit at a level that's most likely of getting hit. Most likely. When I say most likely, I mean this. If we look at this market, something like this, eh? You're trading this move and you want to set a buy. You set a buy at a level that's most likely of getting it. What's the level that's most likely of getting hit? This one, not this one up here. This is most likely of getting it compared to this, because your goal is to exit in profit. That's what the goal is, to exit in profit. So this level the market has reached there like 2 times. It has reached only like once. It has reached there once. So obviously you must set your take profits at this level right here. Then your stop loss, you set it at a level that's less likely of getting it. Let's say the market had moved like this, you set your stop loss below that wick, below here. So yeah, right here we set our level, our take profits at level that's less likely of getting it, which is around here like this. Well, the level that's most likely of getting it is actually this or this right here, because every single swing touched this level right here. Every single swing touched it. This swing touched it, this one touched it, this one touched it, this small one touched it as well, this one touched it, and this one touched it. But if you go to our stop loss, which is right here, this one barely reached it. Let's not consider it. Let's not consider this one. This is an ascending channel, by the way, so it was going lower to higher. But anyway, so right here we can see that the market barely reached it over here. Here's also barely reached it. So that means this level is less likely of getting hit. Then our take profit is most likely of getting hit. So your goal is to exit in profit. So yeah, that's the goal. So let's keep going. Candlesticks. So you shouldn't focus much on lots of things. Also, another thing is when you start in trading, I think you must look at the most is just reversals, where the market's reversed from. Those are your key levels, because we trade with key levels. That's how we trade with. We trade with key levels. You can see the market reversed here. Just set those key. Just set those levels. Even though you think they're useless, trust me, they're actually useful, because there's a lot of times when I look at a chart, I don't see anything. But I'm like, you know what, let me first set my key levels, then hopefully I could find something. So if you look at this trade, for example, right here, let me first delete all of this. Many people look at this and they're like, bro, I don't see any price action in this trade. Hold on. Okay, I'm seeing price action in this. If you haven't seen it, well, me have seen it. So what I'm saying here is, also if you can't see, well, you just do this. I actually use this a lot. But anyway, so what I see here is a descending channel. We have this. I think the market is moving. So like I said, the goal in trading is looking at the level where the markets are reversed from. So the levels the markets are reversed from are these. So those are what you must focus on. So if I trade this, I'd set my swing high, then I set my swing low, which is right here. Then I begin to set other key levels like this, and that's maybe also this right here, this. Yeah. All right, so what would we do here? Well, the market has already happened. The move has already happened. Anyways, let's go further. Let's look right here. We can see that the market respected this level 1, 2, 3, 4 times. So if the market had came here, I'd honestly look for buys over here, but the market didn't really reach the level I wanted it to reach. But anyways, actually I see a double bottom over here, so you can see the market consolidated a little bit over here, kept respecting this level. So this market moved from breaking structure to respect that level, and on top of that you can also see we have a respected level right here. You can see it as respected here, here, and also it failed to break structure. So we set another key level right here in case you're looking to buy and you want to take profits. So yeah, right here you can see the market is losing momentum. That means it's going to reverse from here. You can see that obviously. So now you need to look for a confirmation to buy. Let's go to a higher time frame. The best way to trade this is through a breakout, but here I don't really think we should use a breakout. Here we should rely on rejection. Yeah. So you go to a 15-minute time frame, you can see that we have a great rejection right here. First we had a double bottom, then boom, we go to something almost like a hammer. It's also almost like a doji. So you buy from there. Set your stop loss right here. Remember, you have set your stop loss at a level that's less likely of getting hits, which is below these weeks, which could be around there. Then set your take profit at a level that's most likely of getting hits. So let me look for a level. I would say right here. So I'll set my take profit honestly. But I don't really trade this trade because the stop loss is like it's a 1-to-1 risk to reward. So I'll increase it a little bit higher. 1-to-2 would reduce my stop loss. So yeah, this is a good trade right there. If you risk $100 on this, you would have made $200. Then let's go to a higher time frame, 1 hour. I can't lie, this trade would actually go way higher. I'd set it around here, because if you look at this trade, we can see it has this kind of habit of doing this. Let me go to a higher time frame. So this trade does this, yeah. Goes down, retraces, goes down, retraces, goes down, retraces. So it went down, so obviously that's going to be a retracement right here, and the retracement can't just stop around here. Of course it's gonna go further. So yeah, that's how I'll trade that. And this is actually a great trade honestly. I'm seeing something here. So we can see, remember I said, so you first set your swing high, then you also set your swing low, then set other kinds of key levels. And here you can see the market did something like this, and you can also see it's level respected. Obviously we go to a lower time frame, so in this we should be looking for buys. You should look for buys in this. Remember, you must buy when the market is high and sell when the market is low. No, buy when the market is low, then sell when the market is high. So this is an uptrend obviously, as we can see. So now we have to look for an entry. So in my prediction I say we need first setting this right here. So this isn't valid. It's not valid yet because it has been respected only twice, and we don't know if it's going to respect it here as well. So how shall you know if it's going to get respected? So we shall look at price action. We want it to first reach this level here, then we shall decide if it's going to reverse from here. It's not that we just look at this, we are like, okay, it reverse here, reverse here, reverse here. No, we first need a confirmation. This could have been a random retracement. So let's go to a lower time frame. Now we shall compare so we can see. So here's how you not trade with psychology. Here's how you trade with psychology. So you can go on a 1 hour time frame, and you can see the market give us a doji here before it reversed. A doji, then it shot up. Then you come and compare this one here as well. Here you can see it give us an inverted hammer on a 1 hour time frame. Then it reversed and went all the way up. Then we shall wait for it to reach here. Then we expect the same price action. So here you can see it has given us a doji. I mean, it has given us an inverted hammer right here and a small doji right there. So many people look at this and they're like, all right, let's finally buy now. No, when you go to confirmation, remember our first confirmation is this: the market must be at our key level. And is it at our key level? Nope, not yet. It's not at our key level. So we're going to wait for it to first reach this key level. We want it to first enter this zone to at least touch this line, the same way all the other swings did, because this swing touched this line, this one touched it. So now we want also this one to touch it as well. So after it touches it, then that's when you shall now apply that method of waiting for the doji or the inverted hammer. So right now it hasn't reached, so you can't really consider it. Remember, here it also did the same thing, and you'd be stupid to buy over here. Well, because they say you must get an inverted hammer. Well, they got the inverted hammer, but were we at our key level? No, we were not. Where is at our key level, so we couldn't consider this one. So the first confirmation we need is it must be at the key level. After reaching the key level, then boom, that's when you can now start looking for the candlestick patterns. So yeah,